The war in Ukraine has sent energy prices through the roof, and oil companies are the big winners. Exxon, for example, ExxonMobil reported a profit of almost $56 billion for the last year, earnings not seen in more than 150 years of corporate company's history. Shell just announced a record profit of $40 billion, and U.S. company Chevron has doubled its annual earnings to a record $35.5 billion, which is the biggest in its history as well. Including BP and Total, the Big Five raked in an astounding $190 billion last year. But also the money they saved by cutting investment. A new study shows that in 2021, big oil reinvested less than 6% of their profits. Shareholder dividends have grown, and renewable energy projects have been the biggest losers. U.S. President Joe Biden hit out at American energy giants, insisting they should be helping to bring down energy prices during a cost of living crisis. And leaders in the UK have voiced similar demands. Earlier, I spoke to Christian Küchen, head of the Fuels and Energy Industry Association here in Germany, and I asked him why companies didn't invest more of their profits to bolster supply.
First of all, I think we should say that most of these earnings come from the upstream sector, so the production of oil and gas on a global scale. And the main reason, of course, is that we've seen increasing oil and gas prices in the last years after the COVID crisis. So a steep increase in demand, and in the years before, because of the crisis, reduced investments in producing oil and gas. That's mainly the reason. So it's an effect of the market. This is a kind of swing we see have seen in the past very often. And the key thing, as you mentioned, is there's a strong need for the whole industry to transform, to be compliant with climate objectives. And the key question is how much the industry is going to scale up investments in renewables. I think this is the key ask, the key challenge for the future.
Yeah, let's talk about that in a second. But as there is demand growing, China is reopening, spikes in energy prices have been pushing inflation. Why aren't companies reinvesting more of their profits into exploration, for example?
Well, first of all, we know that the use of fossil resources has to be reduced, and the companies need to be compliant with climate objectives. We can speak mainly for Europe here, but of course there are similar trends all over the world. And we get the message even by courts to reduce investments in fossil and do more for renewables. And I think that this is the main reason. We will see now, of course, a bit more investments in exploring more gas and oil resources again to bring down, to bring up the supply, and at the end probably having positive effects on prices. On the other hand, we get the message and we accept it that we have to, on the long run, get out of fossil resources and replace it by renewable ones. So
okay,
the key question still is, yeah.
Let's talk about that. Only 12% of investments, of these meager investments, one might say, only 12% of that go to projects with low carbon emissions. That's not a lot. Why not more?
Well, first of all, I think we should acknowledge that many of the big oil companies you mentioned have announced objectives for the next decades to increase the share of the investments in renewables, even to up to more than 50%, if you look at individual companies of the total investments. Why not more? Well, I can speak about Europe. We have a very difficult investment setting here. There's a lot of technologies we could provide, like greenhouse gas neutral hydrogen, processing of biomass, residue waste, recycling of hydrocarbons, CCS, for example. And in very many cases, what is missing is a clear, reliable, and practically working legal framework to turn these investments into business cases. I can tell you a couple of examples. We still do not know what criteria are there for the electricity to produce green hydrogen, and that will be a massive demand. The criteria for carbon sources to produce synthetic fuels are not set by the European Commission.
Okay, let me just interject you for a second. Let me interject.
A lot of questions are open that really make it very difficult to invest at big scale. But we see a lot of projects already announced for Germany: ammonia import, for example, green methanol projects, electric charging.
Shell invested less than 1%. Shell invested less than 1% of its $381 billion revenue last year in renewable projects. That is not a good look, is it?
Well, it need to be better. That we need major investments in renewable energies. As I mentioned, it's not enough. But speaking about Europe, I can really only repeat: it's still very difficult. Many of the projects are stopped because of missing clear, reliable, practically working regulation. That is, I can speak for Germany and Europe. Lots of projects are pending.
Okay.
The pipeline.
Let me touch on another issue here. These energy companies, they've been initiating tremendous, huge buyback programs of stock. Shell announced another $4 billion share buyback program. In a world that's confronted with multiple crises, energy shortage, climate change, that doesn't look good either, does it?
Well, we do not discuss in Germany what the plans for the investments and stock buying back stocks. In fact, the key issue for us is there would be enough money, and they announced globally big investments in wind, etc., and all these energies. Again, it needs to be increased significantly, and it's urgent to make these investments. Yes, we agree, and I'm pretty sure we will see a bit better, a big increase of these investments. Whether it's sufficient to reach climate objectives, well, probably not. I would acknowledge that, yes.
And one issue about these investments could be another thing here. Governments have already imposed windfall taxes on energy companies. Word in the UK is that it's not enough what has been done. Do you expect more political headwind? Well,
Germany introduced an excess profit tax, which means that on the refining sector in Germany, which means that as the profits were good last year on average in refining, but not the billions you mentioned on the global scale, coming mainly from upstream sector. And of course, this makes investments in Europe or Germany more difficult. I know it's not only the big oil players. We have many smaller and medium companies operating refineries, and for them, there's now a cash deficit for the hydrogen projects, for example.
Christian Küchen, General Manager.
So this makes it difficult. Yes, it's not a good signal for investments.
Christian Küchen, General Manager at the Fuels and Energy Industry Association. Thank you for your time.
Thank you very much.